Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. I'm going to do a little Rocket stock update today. There's been a couple people in the comments who are asking about what I thought of their most recent earnings and where does really Rocket go from here. So we're going to jump into that. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research and due diligence before jumping into any stock. But if you do like researching stocks and going deep on names like Rocket and many others, as well as some personal finance videos, then please subscribe to the 40 Finance channel. Thank you to everybody who has subscribed so far. Okay, so just to clarify, I am a stockholder of Rocket. I got in not directly on their IPO date. It was like a week or two after. And my cost basis right now sits at $19.84. There was some combination in there. I've got a few shares that were over $20. And then Rocket had some dips and curves in the valley where I averaged down. So I'm landing at $19.84 today. All right, so you see Rocket stock, $21.98. At the time I started recording this, I think it did come down a couple cents as the day went on. But $21.98, so just to be clear, I am in the green, not by much, but whatever that was, a dollar or so. So from a long-term hold perspective, I'm fine. When you look at the chart, though, you can see what we've been through as Rocket shareholders. You sort of got in, this is probably somewhere in the neighborhood of when I first bought in, call it $22 or something, and then it dipped down, so I averaged down. And then I was done, right? And it actually skyrocketed all the way up to $34.42 at some point. And that drop-off point around $34 came around the Labor Day pullback where everything went down for a while. And, now it just kind of has been simmering in that $20 to $22 neighborhood. You can see that on Yahoo, we do not have a PE and EPS. Some of that is because it is an IPO, so we do not have 12 trailing months of data for them to populate it, but Rocket will be positive from an EPS standpoint at the end of their fiscal year. All right, so I mentioned the earnings report recently, and if you look over here where these orange lines are, you get the kind of highlights. Closed origination volume up 100+% over year to year to $89 billion, increased GAAP net income 500% year over year to $3 billion. All right, so all good news on these earnings reports so far, but now let's talk about some of the reason that there's just a lot of uncertainty with Rocket in the marketplace right now. And if you look at sort of that second orange line, they always do statements like this. While the mortgage industry sits at a critical inflection point, we're basically happy for the first 3 quarters of 2020. So since I've been following the stock, Rocket has really just seemed to be super focused on 2020, which makes sense from a business standpoint. But they got off the hook a little bit with COVID going on because they haven't really had to provide 2021 guidance yet, and it's a really good year to not have to do it. And if you're Rocket, not having pressure to talk about 2021, again, it just gets you off the hook a little bit. They do provide forward outlooks for the next quarters as they come through. So if you look at the green lines on here, fourth quarter outlook, they expect closed loan volume between $88 billion and $93 billion, which is an increase of 73 to 83%. They just got done with a quarter, as we mentioned earlier, where they were up 122% on $89 billion. Now they're still going to land in 88 to 90 billion, but in Q4 of last year, the year-over-year increase is only 73 to 83%. Now, 73 to 83% is still good, but when you have so many people looking at your numbers and your growth isn't as much as it was in third quarter, it just is a sort of weird sentiment that surrounds them. Now, I'm not concerned, just to be clear, I'm not concerned at all about their sales growth and mortgage growth over the long term. right? But there is a lot of antsiness in the market for 2021. Even though Chairman Powell has already all but guaranteed us low interest rates, there's still a lot of hesitation, both with home builders and other mortgage-related companies, about whether 2021 is going to be a breakout year or not. All right, so now let's take a look real quick at where analysts feel Rocket is going to land, not only at the end of this year, but also into next year as well. And starting over here in this orange box, this is from Yahoo. These are basically consensus estimates. So the average EPS estimate for Rocket at the end of this year is $3.78. Now that is likely a non-GAAP estimate, so we do have to shave some off of that. But just for fun, pretend it's $3. Today's stock price is around $21, right? So you've got a P ratio between 7 and 8 today, and that's with a pretty conservative GAAP estimate for the fiscal year. So Rocket is trading in a great place, but where it starts to go a little bit south from an analyst standpoint is in the green box here. And you see that they have taken over $2 off of EPS for the year 2021. So $3.78 by the time December ends, and then analysts are saying $1.77 as a consensus estimate for next year. And if you look at the high and low estimates, even the highest says $2.31. So the outlook from an analyst view is, that this is a big year that's actually going to go down next year. I personally don't see it, and that's where my conviction lies, is the fact that I believe that the mortgage environment, both refinance and new home purchasing, are just fine. We will probably have some sort of a winter dip, not only in activity, but if we start getting into other lockdowns and everything before the vaccine goes live, then we can anticipate that there will be some pain for the mortgage industry in the first 2 or 3 months of next year. However, we also know that is officially seems to be a temporary problem with the arrival of the vaccine. Now, another look at that I wanted to mention is in this blue box, which is revenue. They're calling for $15.22 billion in revenue in this fiscal year, and they basically have that dropping 30% down to $10.4 billion. So you kind of have this negative growth mindset coming from analysts. I think that's wrong. So I think the opportunity is still going to grow in 2021, not only for Rocket, but also for home builders and everything. I think the housing market in general, the housing stock market, if you will, is getting a really bad rap, and I think that there's a lot of opportunity to invest in housing stocks in different ways right now. But do your own research. Just remember that the street says next year will be a decline overall. I'm saying it's flat or perhaps even above. And here's just one example why on this Market Watch article. It's just another way to look at things. You can find an article that'll say refinancing won't continue if rates go up. This is one that says refinancing will continue. And a lot of the core conviction for me was around Black Knight Research, which is a mortgage research institute that kind of keeps track of what's going on in the market. You see the green lines that I highlighted in the top paragraph there. As of early November, there were roughly 18.5 million homeowners who could stand to shave at least 0.75% off their mortgage rate by refinancing. So the rule of thumb on mortgages is if you can shave 1% off your mortgage and you plan on staying in your house 5 to 10 years, it's probably a minimum of 5 to really come out ahead, then you should probably refinance. Now they're saying most of these people are at 0.75. That comes up to about 10.4 million homeowners. So again, that's just refinancing. That's not even selling and buying a new house. So there's plenty of opportunities, I guess, if you will, for Rocket to reach out and make some sales. The second paragraph here, though, if rates do rise, the number of people who would benefit would start to shrink. So that's the negative view, right? So if interest rates go from 3 to 3.5% on a 30-year, that half a point cuts out a big swath of the refinance market that would be eligible, or that it would really make sense for them to get a refinance play. But that is only one side of the coin, right? Because you also have the opportunity to move, which that action right there also brings in fees and new mortgages and things like that. And as we've seen through this past year, the housing market hasn't slowed down a whole lot despite the pandemic, and the expectations for home builders are huge for 2021. There's still not enough inventory. So there's more than one way to make a dollar in this market, and I think if you're just going to bucket Rocket into refinancing and not take into account new loan origination, which is something that they've really prioritized, then you're probably overlooking a strong growth segment for this company. And the last line on here, mortgage industry remains optimistic about refinancing in a large part because Americans have continued to spend money on home improvements. And I don't know about your neighborhood, but I see a lot of it in my neighborhood with new additions, new decks, people turning bedrooms into home offices, stuff like that. I see it everywhere. I've got a list of things that I'm looking to do next year too. So I don't know if I'll refinance to do it, but I think the bottom line is the housing world is a strong place to be right now. All right, so bottom line here, 2021 projections are low. That's my opinion, and that's the bet. Do you think refinancing carries on next year? Or do you think it slows down? Do you think interest rates are going up substantially next year, even though Jerome Powell has said basically no way over the next year or two? But that's the bet. That's the fork in the road that you have to decide with Rocket. From a Q4 perspective, I think we will start to get a look at the previews for 2021. Eventually, Rocket has to address where they see the market in 2021. So we should probably find that out sometime in January whenever they get their Q4 fiscal year stats together. That will be interesting. I'm holding through, and I'm expecting big things for next year. And I forgot to cover earlier, I see it on my notes here, though, there's a $1 billion share buyback program that a couple of folks were asking me about. Was it a negative because they didn't really lay out all the lines and went across a couple different classes of stock? Should they spend that money on innovation? In my case, I'm going to take it as a positive signal that the company sees its shares as undervalued, which I happen to agree with, and they are betting more on 2021 than most analysts care to. So while it's sort of a weird buyback situation after an IPO, and it's definitely an eyebrow raiser. For now, though, I'm going to say that the stock is undervalued, and so I don't have a problem with the repurchase program, at least from my camp. All right, and bottom line, as you see there, if we get any dips, crashes, etc., and this thing goes under $20 for any reason, I will certainly add some shares. I've kind of gotten to the point where I've maxed the percentage of Rocket that I want to play with in my portfolio. However, I am a strong believer, so if a price goes under 20, I like where the future can sit.